have a couple of interesting value stocks to tell you about now. Tracey Ryniec, our value stock strategist here at Zacks, is going to elaborate on each of them. Kind of an interesting pair that you brought here with you. PharMerica Corporation, PMC. I don't think you've talked about that one before.
No, I don't think so either. They are well, you can kind of figure it out with the pharm in there. They operate pharmacies, but they're mainly in like hospitals, assisted living centers, nursing homes, like institutions. They have about 91 pharmacies in 45 states, I think it is. So it's an interesting area to be in. It's not, high growth area or anything, but that's why it's a value stock. They just had a real good quarter, and they are able to expand their margins, so that's been good. A lot of that has had to do with this generic dispensing, which is now about 85% of their business. So they expect that to continue on. Last year was a good year for them. They saw some earnings growth, a little over 3%, but this coming year, the analysts are expecting a little over 12%. So they're growing the earnings. Like I said, it's not like a super high growth story, but it's like one of those kind of steady businesses that you kind of look to own because it is steady.
Yeah.
I put up a chart of the earnings surprise history because it hasn't missed since 2010, which is another kind of steady as she goes type of thing. And the stock isn't trading at 52-week highs. It's one of the few that isn't at some new high, but it has real good value credentials. It's trading around 10 times its forward earnings. It has a price to sales ratio of only 0.2, which is really low. Anything under 1 is considered real value. And as a price to book, that's only 1, which is also low because I look for things that are price to book under 3. So it's got all the different value components, and then it is going to have this double-digit growth this year. So it's kind of a nice story if you're looking for something that's in the drug area, but is one of the dispensers of the drugs.
They also have nursing facilities, nursing centers.
Well, that's where they are dispensed. They have the pharmacies in these kinds of locations.
Right. So people aren't going to stop taking medicine.
Well, no, it's a captive audience basically. Yeah. So that's where their business is kind of solid and stable.
Yeah. So nursing facilities, are those like nursing homes?
It could be nursing homes, assisted living,
so as the population
rehab.
As the population continues to age, something I know about, they're going to need these facilities too.
It is a growth area because of the baby boomers, so yeah.
Yeah. All right, American Railcar Industries, you still haven't taken your eyes off the transportation group.
Nope. ARII is their ticker.
Yep.
They seem to go by ARI a lot in their press releases, so I don't know if that's ARII or just ARI. They kind of shortened their name. But these guys have been around a long time. They make the rail cars, but they make hoppers and the tank cars. Oh, okay. Those big, you always see them on the back of trains, they're transporting chemicals or crude or whatever. Right. The tank volumes have been really, really strong. They were strong in 2012. They expect them to be strong in 2013. They actually just reported a record fourth quarter and a record full year. Now these guys, the rail cars have been real hot in, I would say, the last 2 years. But they went from earnings of 31 cents in 2011 to 303 in 2012, which is huge.
Yeah.
I mean, it's like 1,300% gain. And now they're going to moderate that a bit, but still have pretty nice earnings growth heading into 2013. They're expected to grow about another 20%. So this is a growth story. It's nice while the rail cars have been hot. They have a pretty big backlog that's, pretty stable. So, the analysts can kind of tell what's coming down the pike. And the tank cars, like I said, remain strong, and the demand remains strong for now, at least, because the economy is improving enough that, the chemical industry and the oil and energy industry wants these. So, the stock it's a little high flying right now. It's at 52-week highs, or I put up like the 5-year chart here. It's at the 5-year highs, and it's really been spiking along with the rest of the market. But they've been, producing. They had the record year, the record quarter. They've had earnings beats. It's not super expensive given how high flyer it is. It is a value stock after all, but it's trading around 12 times. It does have a price price to book of about 2.5, which is still under what I look for, which is 3. So it still has some good value characteristics, and it does pay a dividend of 2.3% because they have a lot of cash flow coming in, and they are giving it back to the shareholders. So it'll be an interesting play through 2013, and then you're going to kind of have to watch and see if the demand for the rail cars starts to pull back a bit.
Okay. Do you own either one?
I do not.
All right. You can check out other stock picks as well as stock picking strategies. Where? On our website, zacks.com. If you're not there already watching this video, get on over there and you can link to them right off the home page. With Tracey, I'm Terry Ruffalo.